Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 2nd of May. The dollar index continues to tumble. The last couple of months have been unkind to dollar bulls, and this was intensified by the Fed's choice to hold its interest rate policy unchanged at last week's meeting, while offering no hints for a possible action in June. The dollar index plummeted to its lowest level since August 2015 and remained under selling pressure, also compounded by market participants' reassessment on the Bank of Japan's outlook following the last week's policy hold. Soft US economic data have added to concerns over slowing economic growth in the world's largest economy and are most likely to weigh further on the index in the absence of any positive surprises. As for today's highlights, during the European day we get the final manufacturing PMIs for April from France, Germany and Eurozone as a whole. As usual, the final forecasts are expected to confirm the initial estimates. Therefore, the market reaction on this news is likely to be muted unless we have a huge revision from the preliminary figures. Markets will remain closed in the UK due to the early May bank holiday. From the US, we get the ISM manufacturing index for April. The figure is expected to have declined somewhat, but to remain well above the critical 50 line. A fall in the index is supported by the Philadelphia Fed, Richmond Fed, and Dallas Fed manufacturing indices, all of which declined during the month. This could indicate that the recent recovery in the manufacturing sector is not yet on a firm foot, despite a weaker dollar and the latest signs of stabilization in the global outlook. A potential decline in the index could extend the dollar's recent losses, at least at the release. The final Markit manufacturing PMI for April is also coming out, but the market generally pays more attention to the ISM figure. As for the speakers, ECB President Draghi speaks at the seminar, The Future of Financial Markets, a Changing View of Asia, during the 49th annual meeting of Asian Development Bank. Given the venue and the topic of the speech, it seems unlikely that Draghi will say anything about Eurozone's economic outlook. Then again, he could always surprise us. As for the rest of the week, on Tuesday, the Reserve Bank of Australia will gather to decide on monetary policy. The official forecast is for the bank to stand pat, even though market pricing leans towards further easing. Market expectations for a rate deduction surged recently after Australia's CPI for the first quarter missed expectations of an acceleration and instead slowed substantially. Contrary to market pricing, we expect no change in policy at the upcoming meeting. While a slip in inflation does open the door for further rate cuts, we believe that officials will be reluctant to respond to this development so quickly. Besides, other data throughout the first quarter were quite encouraging, while inflation expectations remain well anchored within the mid-range of the RBA's target band, even after the latest tumble in the CPI. On top of that, Australia's government will announce its new budget shortly after the bank's decision, and we expect that officials may be hesitant to take a decision on monetary policy before assessing the updated fiscal data. Markets are currently pricing a 55% probability of a rate cut, which suggests that if the bank stands pat as we expect, Aussie dollar could strengthen on the decision. On Wednesday, we get the US ADP employment report for April, 2 days ahead of the non-farm payrolls. The ADP figure is expected to show that the private sector gained slightly less jobs than it did in the previous month, where the print hit 200K. Despite the potential decline, though, this is still expected to be a solid report, something that could increase speculation that the NFP print due out on Friday may also come close to 200K. On Thursday, we have no major events or indicators due to be released. Finally, on Friday, the main event will be the US employment report for April. The forecast is for the non-farm payrolls to increase to 203k, down from 250k in March. Both the unemployment rate and average hourly earnings growth are expected to have remained unchanged. However, we would like to sound a note of caution as we view these risks around this event as asymmetrical. While a solid employment report is unlikely to bring forth market expectations for the next rate hike, given that other data continue to underperform, a soft report is likely to push hike expectations even further back. Consequently, any disappointment could generate a bigger market reaction than the anticipated strong report. Canada's employment report for April is coming out as well. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.